Welcome, and it's a pleasure to see all of you. We want to share what we're doing with Welcome Home Sandusky. So welcome home, and we'll introduce the team, discuss what we're wanting to do, discuss our product. Next to our pictures, there are Post-its with a pen. I'm asking you to take a look around the pictures, the building plans, the facades, and with a Post-it, write down any ideas you have of things we could do better. Because this is an ongoing process, we're really interested in meeting the needs, your needs in the community, and to produce the best product that we can. Can all of you hear me okay? It's a little bit of a big room. Okay, thank you. So our plan today is to talk about the Welcome Home program, the promise of the program, the product, that is the houses, the homes that we're building for you if you're interested, and then the process. If you're interested in this home, how do you get the home? So it's 3 steps. Because this is a relatively small group and you can speak up as you wish, you can interrupt me or any of the other folks presenting with questions. Or you can save your questions till the end if you prefer. But I do want to make sure that we're answering your questions. If you ask a question and we can't get an answer for you immediately, we'll get back to you right away. And we'll share questions and answers on our website so that whatever information is being shared is shared across the board. At today's meeting, we have all of the partners involved in this process of Welcome Home. So it's leading with the grant applicant, the winners of the largest grant in the state for Welcome Home, the city of Sandusky. So they were aggressive. They went after this immediately. I think the door opened on a new program in the beginning of January last year, maybe January 4th or 6th, something like that. Within 2 weeks, they had their full application in, complete, was found acceptable, and they moved right to the front of the line. With a large award, this program is more advanced than any of the others in the state. I think there are 15 participants. But to get Sandusky's not the biggest city in the state, but it's got the biggest award. So that tells you this city is watching out for its residents, and I think that's really important. Also included is I'm Joe Ritchie. I'm the Chief Executive Officer of Community Building Partners, and we're a co-developer and we're the builder of these homes. With me is Brian Green, who represents NeighborWorks, Toledo's NeighborWorks, Neighborhood Housing Services, and they do the financial literacy. It's a requirement of the program. They're excellent at it. They've been certified by HUD. Their folks are trained. They do their literacy training, and it's used all over the country. So if you get the training here and you get down payment assistance and you sign off on your financial literacy and you're in Utah, you still get the support because they're nationally recognized. But they're here to do in-person financial literacy. Not today, but soon, as soon as people are signed up for it and want to go through that process. We're here at the home of Civista Bank because Civista Bank has stepped up with their program to interleave it with the Welcome Home program to make it as easy as possible to become a homeowner with this program. So they're representatives of Civista Bank, including the mortgage lending team, that can talk about the pre-qualification process that's necessary to get a home. So that you actually can talk to them today. They're here. Actually, Tim, anybody else in mortgage lending, raise your hand. So
Jenny Christine
just
downstairs.
Okay. Well, so as they come on board, if you have questions about pre-qualification for a loan, you can discuss that today or make an appointment with them and follow up. I hope all of you have signed up on the sign-up sheet because we want to make sure that all of you have the same current information as we proceed through this process. The grant itself was $3.5 million. In addition to that, there was some money for Habitat for Humanity that the city got for their program. But those are the funds that are being used to produce as many as 34 new houses on land that infill lots in the city of Sandusky for you and your families. I wish it were more. I think the demand is a lot greater than 34 units, but once again, Sandusky got more than its share of commitment from the state, and they have a robust program which could increase over time depending on the pleasure of the Ohio legislature whether they would renew it as an ongoing program. But the Welcome Home program itself is a creature of the legislature, so it's your legislators that looked at this housing crisis, which is basically how many people aren't getting a chance to become homeowners, and also the pressure on rents from the number of people that need to be renting and the pressure on that in every community in the state. So that's the agenda. Tim, if you could flip forward. Thanks. So this is what the city asked for. And the print may be small, but it's basically $3.5 million. The funding is on a reimbursement basis, so they had to be artful about it, working with the bank to make sure that all this comes together correctly. The homes, we build the homes, but we work with a valued partner, Unibuilt. These are prefabricated, high energy efficiency homes. They're two-story homes, but when they are delivered to the site, it's fascinating, but they're delivered to the site and they're craned into place on foundations and site work that we build. Then those units have the HVAC, the electrical and the plumbing completed for the units, the exterior carpentry, the site work, the porches and the things that are added to it to complete the unit. But they're built at a factory in a controlled environment with very tight quality assurance. So the houses come, they're already permitted, they're actually already under construction. So we're moving forward with that process. A couple asked earlier if there's a single story version of this. We can do that. We don't have that in the schedule right now, but it's achievable. What we did do was design a home that has a first floor bedroom with a bath, so that for those that are the mobility issues of the staircase, so they have able to live on one floor. The 2 bedrooms and a bath upstairs, 1 bedroom and full bath downstairs. So that's the general gist of it. Tim, if you could flip forward. So this is the process. Again, apologize for the small print, but you start with, we started with the land bank properties. So the city of Sandusky, we reviewed them for constructability, the ability to put them together, their own community development, seeing where that could have the most impact on the community. So a lot of measures go into place to figure out which properties. Then we purchase the property from the land bank, the lots. We secure a mortgage with Civista Bank for the construction. We build the home and deliver it. And then the homeowners, the prospective homeowners, have to do 2 things. Go through the financial literacy program, which is an 8-hour program, but it is a very effective program in that it sets the stage for home ownership. So that is done in person here in Sandusky. So Brian will come over from Toledo for whatever, probably a Saturday or whatever, however you do it, but we'll set it up, and we'll probably have to do it more than once to make it work for everybody. But that financial literacy is the first step. Pre-qualification is the second step, or maybe it's the reverse. Start with your pre-qualification, because the lenders can do that right away. We want to make sure that you're heading toward ownership. These homes, the loan you have to qualify for is in the range of $150,000 to $160,000. We're settling on that now with the options and so forth. The house is complete. So when you get it, it's all new appliances, washer, dryer, everything's complete. It's a high energy efficiency unit in that we'll have reduced energy costs by reaching for the highest level. It's all electric, so it's a high energy efficiency electric heat pump system, Energy Star rated appliances, well insulated. These are 25 standards for electrical systems and efficiency and insulation. So all of that comes together for this. Your role as a prospective homeowner is go through that process of approval, and on a first come, first served basis, acquire the home. The homes will be built and delivered to you. So on the day you get the key, you're at a move-in ready, brand new house that has a builder's warranty, has all of the system warranties in place, so you would not expect to have a lot of operating expenses relating to a brand new house that's under warranty. There's not a lot of this in the community. Most new builders are focusing on very expensive houses, and it leaves everybody out of touch, or most people out of touch for it. So this program really tries to fit that need. Tim, if you could advance. advance it. So here are the 3 Ps. Our promise: expand homeownership in Sandusky with the support of the state grant. Affordability and quality as clustering the units in the community. The product, that what we have and what we're asking you to take a look at and comment on today is that 2-story, 3-bedroom, 2-bath, 1,300 square foot home. It's on a full foundation with an 8-foot basement, 8-foot tall basement. So it is possible, and the laundry is in that lower level. But other than that, it's an unfinished but full basement. So it has some expansion opportunities for you. We're not doing that because we're trying to keep that entry price as low as possible. But I will say, having done this quite a bit, it's very easy to convert that lower level into a rec room or additional space if you choose to do it. But it's nice to have that feature, and it makes the house more valuable. All these houses are on single-family lots of record. So you get a deed to the house. It's a straightforward transaction. And then the process, which is reviewing program eligibility to see if you fit, and then get the mortgage qualification and the financial literacy. You have a question.
What's the interest rate? Is it is it the same as what it is?
Yeah, so Tim can answer that question, but today's
Current market rates,
yeah.
it's
Current.
the same as what you get in any other home, any other loan product. Yeah.
But you do have some special features that you've knitted together having to do with credit qualification and other things to fit it together. There's no down payment required for this, 0 down payment, because there's so much equity. There's $100,000 of equity in this house for each of the buyers. So given that, there's no need for an additional down payment. So of course, down payment is one of the many hurdles to becoming a homeowner. Having that down payment, as the prices go up, the down payment becomes enormous, just meeting that. So having this grant in place really serves that purpose of eliminating it. Does that answer your question? Today's rate, I think, is about 7%.
Just under,
Which,
yeah,
and
right
if I'm just estimating, but that would make a mortgage payment in the under $1,000 or something in that range.
1,050.
1,050.
160,000.
Now, the house it qualifies for, subject to, I think you have to apply to the city for it, but it's, and I'm gonna look to you, John, but it's 75% real estate tax abatement for up to 10 years. So that's also big. If you think about your housing costs being housing, your taxes, insurance, and utilities. You have a house that has a significant write-down in the mortgage. You have 75% tax abatement for 10 years, which affects your underwriting for your loan qualification. It's super energy efficient at the highest level we can get it. And by highest level, that's the highest level that the federal government has determined for housing. So we're reaching that high standard. So keeping the utility costs low. And then it's a new house, so I think the insurance costs will be pretty reasonable. So just trying to keep every one of those budget items as pinned down as we can to make it easier to become a homeowner and maintain that. So that's the promise, product, and process. Next. So, is this what you wanted to talk about, John? John Orchak, the city manager.
Good morning. Thanks for coming.
Second.
Yeah, I get one slide, so you only have me for 2 minutes. We're very excited about this program. As Joe had said, we thank all our partners, Savista and Joe. Colleen over here, and Aaron Blair are the masterminds and the ones that put this.
Brain trust.
Yeah.
Yeah.
Put this grant together. They did a phenomenal job, and it is something that's probably going to get modeled throughout the state. On behalf of the commissioners who I work for, I know that housing is their #1 priority, and in our strategic plan that we just adopted last month, towards the end of the year, affordable housing is a component that they really want us to focus on. So between zoning regulations and different opportunities, our city and our commission and staff is 100% committed to trying to get homeownership and affordable housing into the community. Some of the programs that we already had prior to this was a beautification program, and we really focused this last year in '24 on home ownership, and those dollars went to homeownership. In the down payment assistance program, we were, I can't remember the total of who benefited, but there's quite a few people that got down payment assistance from the city already prior to this program, and this is just going to enhance that. So we're really excited about it. We think this is a great opportunity to bring homeownership to the community, and we're grateful to the state of Ohio and the Department of Development and the governor and all the legislators for having this money available. It's I think a once in a lifetime opportunity for us, and for us to be able to put 34 new homes in our community is going to be phenomenal. I know Colleen, Joe, and Savista, and everybody that's in our partnership will work with everyone to try to make this become a reality for you. So again, we're committed as the city to make sure this program's successful and to provide the opportunity, and we appreciate your time today. Thanks.
Thanks, John. So I went through the product, how we deliver it. We have the land bank lots. We purchased 10 of them. We have, and we're doing lot splits, so that's a total of, I think, 13. And then we have 15 in contract. So we have lined up the lots that I think are constructible and that can be built. We have Unibuilt has started their construction, so I didn't bring pictures, but they're in the drywall stage on the first houses. And then we're working with, again, Savista and NeighborWorks. As I described it, 2-story, 3-bedroom, 2-bath. So we're trying to eliminate any kind of physical obsolescence. These are very attractive homes. Unibuilt's built them and delivered them all over the state, so we know how the market has accepted them. Next slide, Tim. And then I just run through real quickly. We did focus quite a bit on energy efficiency because going back to that budget, you know, this is your budget, and how you make it as a homeowner is keeping those costs under control. So having a very energy efficient combination of very well insulated house is really important. So we focused on the energy efficiency, the prefabricated construction. There's a slight bit of customization that's possible. We're trying to keep it streamlined so the product is very similar. The homes, the lots that will permit it, we have what I really enjoy, because my wife is here, and we have a front porch and it has a side porch to it, and it's fun to have an outdoor room like that. So we think that, and it fits really well in the community. So we tried to, every house has a front porch. Where the lot is big enough, we have a side porch extension, so it's really like an outdoor room. You can see from the pictures both kinds. I think right now, maybe about half the lots, Mark Dodd is with me, he's our construction VP. About half of them can accommodate that side porch. The others have just the front porch, but they're both the same building plan. So completing the work for the local conventional site work and completion of the units, we are working as much as possible with local trades, keeping that in the local economy. So we've got bid packages out, and maybe some of your neighbors are bidding on that work right now to complete it. But that's the product specification. Tim, can you? And then, so these other aspects of neighborhood integration are important. That's really where community development comes into play, because there's a fairly detailed approach taken to it. First, is the lot buildable? You know, is it environmentally sound? Can we build on it? Second, is it can we deliver the Unibuilt prefabricated units to the house? Because you have to have clear wire, and you have to be able to get into the site with a crane to lift them in onto the foundation. So there's another consideration. Then it's grouping them or putting them into places that will have the maximum impact on the surrounding neighborhood. What our experience has been, when you put a new home like this in a community, the neighbors' values go up because your value is quite high. Even though you're paying less for it, the value of the house is $260,000 to $300,000. So it's realistically, you're going to raise the value of your surrounding houses, which means they may be able to access home equity loans or financing, which might improve their neighborhood. And what you're also encouraging more home ownership in the neighborhood, so people can stick and stay in the homes that they can repair. So that's another of the considerations on the neighborhood. And then I did mention the full foundation, the fact that it's on a lot of records, so there's actually more buildable. I'm not thinking that you're gonna necessarily buy the house and then build an addition, but I will say that lower level is super easy to make accessible as a secondary space. Next slide, Tim. So this is the income qualification. The state has said they're really focused on folks that are 80% of median or lower. And I think their theory is at 110 or 120% of median income, you probably can afford a home in your community. That may or may not be true in a lot of communities, but the 80% mark is where you are, and it's adjusted for the community you're in. This is Erie County's 2024 numbers. That'll change in a little bit, but if you can see them, a one-person household, the income limit would be 51,000, and then up to a six-person household, which for a three-bedroom home, you could have a six-person household, 84,560. That's not the amount. So that's the 80% of median to fit into the program. That is not your qualifying income for a loan. That is your pre-qualification determines that. But that's the maximum income that you can have and fit into the program. So one of the things you want to think about is your own income, and does this fit where you are today, and could you qualify for this program?
And Joe, I'd like to reiterate, you don't have to make that, you can't make more than that.
Yeah, thank you.
That's critical.
Yeah.
These are the income limits. So if you are a single person household and you make $55,000, you will not qualify. If you make below this 51, I can't really see it,
Yeah,
51,000, then you would qualify. And again, we will be here afterwards and we will be available to talk with folks as you have questions.
And that limit was set by the state, so it's not adjustable. It was the state created that program with the income limits.
If you don't mind, Joe, I'll jump in
Yeah,
and
jump
give you
right
a little
in.
bit of a reprieve. I'm Colleen Gilson, I'm the Director of Community Development. I also wanted to acknowledge our Chief Planner, Aaron Blair, who worked with me on this program. I also want to acknowledge Commissioner Pajali, who is here with us, who is a member of the City Commission, my colleague Marcus Harris, and my colleague Tom Horstman, and you've already met John Orzik, our City Manager. Just to share a little bit about myself, 30 years ago, I bought my first home through a program similar to this. So I've been in your shoes. I've been in a place where I was a little anxious about what I was about to get into, and it worked. So thank you for being here, and it is really a pleasure and an honor to be able to bring this project to the city of Sandusky and hopefully to all of you. As Joe already mentioned, you have to have the ability to obtain a mortgage. So through that financial counseling, if there are hiccups in your credit rating, we will work with you to try to overcome those hurdles to get you into position to purchase one of these homes. If that doesn't happen, we'll still work with you in trying to get you into some home ownership opportunity. You have to commit to living in the home for at least 5 years. So within those first 5 years, you need to reside there. You also have to agree to a 20-year deed restriction and additional terms. If you were to sell that home, it has to be sold to someone who's at 80% of median income or lower. We want to protect affordability in Sandusky, and if you have the opportunity to move somewhere else after that 5 years, you sell it to someone, you sell it to your neighbor, you sell it to whomever qualifies to protect that affordability here in the city. Joe already mentioned you have to agree to participate in financial literacy for 1 year. It is an 8-hour course. It can be spread out throughout that year, and we will also provide other opportunities if you need assistance with your financial counseling, with your own personal finances. The state of Ohio will be required to be a third-party beneficiary of the purchase agreement. That's legal terms that they're going to be listed in the deed as a party in the transaction. And then, again, having a maximum annual income of 80% of area median income or lower at the time of purchase. So I did see a few people already leave. They feel that they were maybe priced out of that.
I'm priced out.
And if you're priced out of that, please stay in contact with us. We'd love to work with you to get you into a situation where we can provide home ownership for you. With that, I'll turn it back over to Joe for the next slide, or whomever's going next. I'm not sure if we're going to talk about mortgage qualifications now.
So Tim, you are up. you want to describe the Civista program and also how your program interleaves with this well?
Joe had more of the fun part of talking about the home, so I get the maybe not so fun part of how do we pay for these things. So, but I do think we make it easy for you. You know, talking to one of our lenders is the way to get started. You know, we kind of lay out the process here. You know, first thing is kind of knowing your own numbers and your own budget. What can you afford? You know, like we talked about, you're looking at a payment roughly on this thing around $1,000 plus your insurance and your taxes, which will be, you know, greatly reduced. So maybe you're at $1,300 or so a month on a payment on one of these. So, you know, that's kind of where you know you want to think, is that good for you? Does that fit your budget? You know, the next step is really getting with one of our lenders and doing that pre-qualification. That's us crunching numbers and make sure you qualify from a debt-to-income standpoint, looking at credit, all those fun things, and then we're going to determine, you know, almost right away where you're at. Will you fit for this? Or, you know, we talked about people being priced out. You know, maybe you don't qualify for one of these, but you still qualify for home ownership in one of our other programs. So still a good idea to look at it, even if you think you might be priced out. You know, the city has down payment programs. We've got a down payment program coming out in March. So there's other programs to get you into homeownership if this doesn't fit. Plus, at the end of the day, there's only, 14 of these, so.
34.
Well, total will be 34, yeah. There's gonna be some people that maybe are qualified that don't get these, so you can get other homes and other avenues too as well. So it's a good thing to get with one of us just to figure out what are my options, basically. Talked about loan options. The shopping, I guess the shopping's kind of done in this case. We know what the homes are, but again, if maybe you don't get one of these, maybe you're shopping for another home, but you'd have that opportunity at that time. And then again, once you find the home, get in contract, and that's when you go live, once the home is done at that point. Some basics in there about debt-to-income ratio and things like that. You know, this says 43%. Basically, the way to look at debt-to-income ratio is take your gross monthly income before taxes, what you make, cut it in half, and that's how much debt you can carry. If I make $4,000 a month, I can carry $2,000 in monthly debt. That has to include your mortgage and any credit payments, so car payments, student loans, credit cards. That won't include utilities or streaming services or anything like that. It's only what's on credit. So keep that 50% debt-to-income ratio figure in mind. We do allow up to 50% expanded in our Community View program, which is kind of our prime program for this. So that's kind of where you want to think to be. But again, we'll help you figure that out. If you're over that a little bit, a lot of times it's a matter of maybe I got to pay off a credit card or tweak some debt or combine some debt into a consolidation loan or something to free up some of that debt-to-income ratio room. But those are things we would be able to figure out for you and help you with. You know, and again, you know, keeping in mind the ongoing cost of home ownership. The great thing, like we said, you've got the reduced taxes. That's going to save you, gosh, probably a couple $1,000s a year over 10 years. So do the quick math. I mean, you're probably saving at least $15,000 to $20,000 in that first 10 years with that tax abatement. So that's huge. You know, you're going to have, you know, maintenance and repairs. But again, like Joe said, brand new home. You're not going to have very much in maintenance and repairs versus, you know, if you were buying an older home, that probably would have quite a bit of that. Utilities, taxes, and then your insurance. Mortgage insurance is another one. Our prime program we want to use for this is our Community View program. It does not charge mortgage insurance, so you wouldn't pay that. Now, there are other programs that you may qualify for this home or for another home that may have mortgage insurance. So those are things we would look at in your qualification and kind of figure out what fits you best. Again, just kind of the choosing the right loan, that's what we're going to help you with. There's essentially really 3 products we would go to. Again, our Community View is our in-house first-time buyer program. Secondary buyers are also eligible as well. If that doesn't fit, we also have conventional loans and we have government loans like FHA, VA, if we have to go that avenue. Any of those loan options can work for these homes. The main thing is just figuring out what works best for you guys and what's going to fit for you. This just talks about, you know, those different programs I mentioned, FHA, VA. Don't think about USDA. That's not eligible for the city of Sandusky. That has to be more of a rural property. Our Community View, like we mentioned, construction to perm you don't have to worry about, which is great. You're getting a new home and you don't have to do the construction lending process. You're just buying a complete finished home, which is ideal. And again, there's fixed rates, adjustable rates. Most of what we'll be looking at for you guys will all be fixed rates, ideally. In our Community View program, this is what I was talking about. This is our prime program we want to use. Is anybody in here owned a home before? Is anybody owned before that's here? Is everybody first-time buyers? We do have, okay, and there is eligibility if you've owned a home before. You don't have to be a first-time buyer. There's just a few little bells and whistles that the first-time buyers can get, but you would be eligible as well if you meet those qualifying criteria. Again, mentioned with the community view, we don't charge any PMI. Disregard the grant thing in there, where these homes are built, there wouldn't be the $3,000 grant eligibility on these initial ones. So if you see that $3,000 grant thing, just, disregard that in this case. But if you were buying a home somewhere else that's not one of these homes, there is an area in Sandusky where you can qualify to get a $3,000 grant towards your closing costs. If you buy a home in that area, and that's something, we can talk to you, our loan officers can cover with you and tell you where that is. We talk about the home ownership education thing, that's already baked into this. This program has kind of that same thing. If you go through this program, we actually have an online one you can go through, but same thing, financial literacy, kind of getting you set up for home ownership so you understand, everything about it.
How many hours is the total class for that financial literacy?
Say 8, Joe?
8 hours.
8 hours total? So you go one day, or is it 2 4-hours?
1 day or 2 4 hours.
Okay.
And then there's additional follow-up information that's provided, but there's not a class. So, like follow-up emails that would be tips, for instance, so, share. But it's, the actual class is 8 hours.
Okay, now through that program, initially when you spoke, you said that there was no money down,
Right.
and that's why the payment ends up being $1,000. To me, that still seems like it's a lot. Through that financial literacy, does that encourage individuals to save money, to put money down towards the house, so the house payment is not as much?
Well, certainly, if you have money to put down in addition to that, you could reduce the payment.
Correct.
So, I don't know, Brian, in your financial literacy, you're encouraging savings, I take it?
Yep, that's a part of it, and I'll go into it a little bit more, but yeah, we'll go over savings, budgeting, how do I get those numbers to work for you, so, if that 1,050 is not a good number for you, kind of figuring out what we could put down and help reduce that, and make it a more comfortable number for you.
And from the beginning to the end of this process, how long is that time frame? So if I go in and say, okay, I want this house or whatever, so when I start till the time that I get approved, how long is that process?
Well, the loan approval process, pre-qualification.
We're almost like immediate, same day pretty much. Once you apply with us and sit down with us and talk to us, we're gonna know right away where you stand, where you qualify, as far as our end from the lending side.
And then from that point, how long does it take for the construction and delivery of the house,
So once pre-qualified, you enter into a purchase contract
right?
for a specific house at a
Correct.
specific lot.
Right?
Then there's a schedule for delivery. Our schedule is 2 houses per month on a continuous basis. And the first delivered units will be in April. I'm pointing to Mark because he's gonna tell me that. Yeah, April's first. So, starting in April, 2 houses per month, over that, period of time. So your house will be delivered in a queue, basically. You'll know when it is. It'll be April, May, June, July, 2025.
Okay, because that doesn't seem like a long time, enough time to really bulk up or save up enough money to make an impact on that payment, because that $1,000, even just looking at it, that seems like a lot. I mean, it's a good thing that they don't have to have any money down, but it still seems like it's an enormous payment, I would think. I don't know. What did, anybody else?
And that's the
Okay.
budgeting conversation
Yeah.
that you wanna have, look at your
Okay.
numbers and talk to us and see where you fit, and, not everybody's comfortable with a bigger housing payment, some are, some aren't. The one thing I would say about savings versus down, they're encouraging savings, we do as well. If you put $10,000 extra, you might only take 40 or 50 bucks off the mortgage payment, but would you rather have 10 grand in the bank or 40 or 50 bucks off your payment? You might want the savings for for emergencies and things like that. Just depends on everybody's individual situation, though.
And then too, for the term of the loan, it seems like 20 years, is there a way that can be extended to like a 25-year or 30-year loan? Because then that would make the payment a lot
Yeah.
less.
It is a 30-year loan.
It is a 30 year?
Yeah, it is a 30.
And it's still 1,000, oh, because there's no money down.
And you can do shorter terms, there's 10, 15, 20 year, if you did wanna pay it off faster, if you're comfortable with a higher payment. In some cases, some folks are, because you'll save a ton of interest that way if you do go shorter on the term, if you're okay swinging the bigger payment.
So there's no prepayment penalty or anything
No,
like that?
Not at all.
That's an interesting point because interest rates are relatively high.
Mhm.
I mean, 7% is, and I don't know where they're gonna be, I
That's
can't
high.
predict, but let's say that rate drops to 5% at some point with no prepayment penalty. You could refinance, have a lower dollar amount, but you still have you still have your valuable house, so you can refinance. The other thing is, I guess, I'm not a financial literacy expert like Brian, but in answer to your question, like, getting in the door with this is really valuable.
Right.
And so looking at your total budget, which might include a car payment or other kind of credit installment payments or something. Just seeing how the whole thing, including your utilities, might be wrapped together and figure out if that makes sense. So the $1,000 sounds kind of high, but you might be saving some on your utility expenses because this house is gonna be much more efficient than the houses that most people are living in, since it's at this 2025 standard.
And with that being said too, is there any kind of rebates or anything since this is an energy efficient house? So when if a person goes to file like long form income tax or whatever, so is there kind of a rebate for that as well?
There could be rebates involved. So I don't know the answer to that right now. But you bring up a good point, the interest is deductible, so if you're itemizing your deductions, there's quite a bit of savings when you net out. And Brian, I don't know if you go into that, but if you itemize your deduction, you have the interest, the savings could be a couple $100 a month.
Yeah, not typically in that, we probably go more into that when we do our income taxes for our clients.
Okay,
It'd be separate from the clients.
No, I was gonna say, we always say, talk to a tax advisor, talk to a
Right.
professional that does taxes, what you can and can't do, what you're eligible for, and how all that works, yeah.
Yeah.
Thanks, we don't wanna speak out of turn, so to speak, yeah. You know, as far as back to this program, wanted to mention just credit. 620 is our minimum credit score that you really need to qualify. That will get you in the door to all of our loan programs. And what we do is we're gonna take the three major scores and we take the middle of the three. So if you're tracking your score using a Credit Karma, or that 620 is kind of that line in the sand you wanna be at. But again, when we pull it, we're gonna be able to sit down with you and counsel you and say, hey, look, if you pay this, if you do this, you know, we're gonna give you some things if your score needs to get juiced up. There are score booster programs out there now where you can, you know, work with the credit companies and get your score boosted up quickly. So again, that's something to keep in mind, is that 620 credit score number. But also with Community View, one of the cool things is we can do a no credit loan. If you've never had credit, or you don't have enough to qualify, or you don't have enough to get scored yet, if you've just started your credit history, we can do an alternate credit. So if you pay, we gotta find three things. One can be rent, it can be a car insurance, it can be your cell phone. Anything that you pay consistently for 12 months in a row, utilities, anything like that, and we can document you've paid it 12 months in a row on time, 3 of those, you're gonna qualify for the loan. So keep that in mind. I don't have credit, I don't have any credit scores, you still can qualify. So still talk to us and look at what your options are. One thing to keep in mind is you can't have bad credit, you can't have had credit and ruined it, and now have bad scores and then get a no credit deal. It's if I've never had credit, or if I'm new and I haven't established enough of a history on the scores, we can look at that alternate credit for you. So that's kind of a cool way to go as well. And we assume that, you know, if you have this alternate credit, we're treating you like you have a qualifying credit score, basically.
What are
got one
closing
question.
costs?
Yeah.
I got a question. What's the square footage on these houses?
1,300 square feet.
Huh?
1,300 square feet.
Wow, that's what I thought. And my question is how do you get 3 bedrooms and 1,300 square foot?
Well, the floor plan's right here, so you can take a look at it. It's a
'Cause
pretty
I live,
efficient plan.
I got a roommate, and I live in 1,800 square foot, and I've been there for 8 years, and I'm ready to run. You know what I'm saying? The walls keep coming in. I could not imagine putting 3 people in 1,300 square foot.
But
Well,
it's
if you look at the floor plan and see what you think of it, it's
Yeah.
laid out here.
Yeah.
And comment on it.
And
There's a-
and for that much money, I've been building houses my whole life.
Okay,
For that kind of money, I mean, you should have $150,000. I can get a pretty good house built for $150,000.
I don't think so.
I've been doing it for a while.
I
Building
wanna
costs
talk to you
are-
about it.
Hey,
because
We
you
haven't
can-
seen them under 350,000 really.
Well, I know what they charge.
Oh, yeah.
and I know
It's
what
not
they
cheap to
cost.
build,
I
yeah.
know what labor is, and I know what,
It's crazy, yeah.
cost of materials, but
Yeah.
I'm just saying, yeah, it just seems to me like 1,375 square foot, and you gotta shove 3 people in that. It's gonna be tough.
So take a look at the plans, but
Especially
we have
the five
post-its if you got ideas.
Yeah. Right.
Happy to look at it.
Are
I
there
know you know.
model
Thank you.
homes that like you can walk through?
Well, we will.
Once you build
So,
the house.
you know, as we build the houses, we can do an open house before delivery, like when it's under construction, so you can walk through the house. But we don't have them now.
Oh, no, I was wondering, cause you said they were built in a factory or something like that, so
Yeah.
I didn't know if they had, model homes somewhere.
So, we don't have a model of this home. It is possible to visit the factory while they're being built. It's in Vandalia, so it's a little bit of it's like a, I don't know, 2.5 hour drive. they do tours on Saturdays, so you can see how the construction's going, including of these homes. But we don't have a model. As the houses are being built, you can share that with others.
I'm glad you brought that up, because when we do new construction on modulars, most people will go to the factory to check out the build and look at product and things like that, so, yeah, if you wanna go see how it's built. And yeah, just to back up what you said, with these things being built in a factory, I can tell you from our new construction, when we do stick-built homes versus when we do modular homes, the modulars are so much cleaner, that they go faster, they're built in a factory, so they're, you know, there's no variance, you know, versus a guy out in the field swinging a hammer in the cold, you know, this is built to specs exactly, so it's pretty cool how those comes, and when it is, like you said, when they set those homes, literally, and the next day, connect everything, and it's done, it's a pretty cool process.
Will there be driveways or outdoor sheds that go along with them?
There's off-street parking, so there are driveways with every house. They're not garages with every house, but there is off-street parking designed for every house.
Oh, and what about the closing costs? That's included, or how much does that bring?
That's out of pocket, I mean, figure 3,500 or so closing costs roughly, what you're generally gonna pay, that's your, you know, appraisal fee, title fee, surveys, all the fun stuff. That's standard on really any mortgage, and this would be the same for, you know, any mortgage product, any home purchase you were making.
Did you say that's out in addition to, or out of pocket?
That's out of
pocket.
pocket. Closing costs on a purchase of a home are always out of your pocket. Yeah.
Okay, so you said there's no money down, but essentially, there's $3,500.
Your closing costs, sure, and then you're gonna have to pay for your insurance your first year, so that might be $1,000-1,500. Some prepaids for your escrow account, so you might need $5,000-ish or so to come in, just to cover those costs. But keep in mind, you are getting $100,000 of equity in the home, so,
Right,
you know,
right.
it's kinda like a scratch-off ticket in a way.
But with
When
that
you
short
walk
per-
in, you own that equity, so.
Right, but with that short turnaround time, as far as like you're saying, you're gonna start building houses in April, so I got, 2 months to get $5,000 kicked
But
out?
we're not building all 40, or all
Yeah.
30 homes in April.
Well,
There
no,
will
the
be-
first one, any person that applies would need to have $5,000 by April in order to get their house started, correct?
Absolutely.
Okay.
If they're the
You
first
said no
buyer.
driveways?
You said driveways but no garages, right?
Right.
Yeah.
Yeah, driveways but no garages, yeah, we'll have a
Off-street
driveway.
parking? Off-street, you
Yes,
mean
so
off
in the
street?
driveway, so
Yeah.
the.
So
the
there'd be
driveway will
off-street
be
parking
long
in the
enough
driveway.
That you can stack 2 cars in a.
Okay.
I'm sorry, you said yes driveway or no?
Yes, the driveway, which will provide the off-street parking, yeah, you'll have a 2-car driveway, yeah.
And what about, like you said, like if the interest rate is 7%, and say like you refinance, but there's deed restrictions, do you have to jump through hoops to refinance?
Deed restrictions would not impact the refinance in any way, it's only if you go to sell it and,
Or I guess I meant like, so on the lien, is somebody else on there with you
Yes.
then?
when you say somebody else.
The bank.
The, whoever, because you have to stay there for 5 years and you can't, like if you sell it, so is somebody else on the lien,
Just the deed
Bankers
restriction,
in the state of Ohio.
yeah,
the state of Ohio?
yeah.
So before you refinance, you have to get like a signature or something?
Most likely, we'll check into that for you. I don't have that answer today, but we will. These
Most
are-
times
these
in
are great
cases like this
questions.
with grants, they'll just resubordinate their lien for us. It's a process we take care of. We have that with a few of our grant programs where they put a back lien on the house, but if you refinance, they just move their lien back to the spot it was on. But yeah, we would take care of that for you. I'm sorry?
Yeah, build on them.
Yeah.
Yeah, you can.
They own it, right? There's no restriction on.
Yeah.
future
Actually, the
construction.
house is designed, the house sitting on that lot, there's room to build an additional room if you wanted to. So really thinking about expandability, so you can stick and stay. If maybe you're a growing family, you might need more space later, but yes, you can do that.
And anybody that gets in that pipeline, if you're eligible, you're moving through the process, you're getting into the contract, looking for the home, we can help you in the planning and zoning department to see if you have room for a garage or a shed or an addition, like what your setback requirements would be, so you know going in what that future of that possibility is through the city zoning code.
Question, oddball scenario. Say I've got a house and God forbid something happens to me and I no longer am able to live in that house, I pass away or whatever. You're saying that it has to be sold or transferred to someone else. How is that, okay, and I would want to leave it to my child. And my child may make more money than,
If they're over, and
How would that
answer
work?
one? How do we-
Yeah, that's gonna be a great question for the state of Ohio, but I believe the new owner would have to qualify at 80% of median income.
wonder how that works for like an inheritance situation.
Yeah, surviving,
Yeah.
I
That's a good
feel like
question.
they might have had something in there for
Yeah,
that.
this-
I would think there has to be,
Yeah,
yeah.
so far the state has been pretty silent on those questions, and again, we're the first program to really launch, so we'll be setting the stage. But they did speak to the fact that if there is, God forbid, some sort of death or anything, that there will be leniency in working with the surviving owner of that home.
Leniency. So they haven't spelled out what that
They have
leniency
not.
will be?
They have
Okay.
But I will say, since we're first up, most of the things that we have asked, the questions, they've responded in the affirmative of like, well, that makes sense.
Yeah.
So it's like a common sense, and actually, the thing they're trying to focus on is preserving affordability, and they don't want the churning of these houses where somebody comes in, basically an investor comes in, takes advantage of the program, turns it around and takes that money out of the community.
Exactly.
So that's their spirit of it, it's not to, harm the homeowner. So my guess is in the inheritance situation, if the inherited family member is over the 80% income on that day, that there's probably forgiveness of that. One time
Probably.
for that,
Probably.
yeah. Probably. But our experience has been when we present a common sense question like that, which we'll do,
Mhm.
we'll get a common sense answer.
Yeah, and then we'll have it in writing from the
Yeah.
state.
Okay.
Yes, so I know you said you're walking to about $100,000 of equity. Are you allowed to tap into the equity at any point in time after so many years?
I don't believe, there's no
Yeah,
restriction.
you can tap into the equity. So, that is based on the appraisal and what the circumstances are. So it's actually designed for people that want to stay in their home and actually even grow in the home, because you have the benefit of that as long as you're staying there. And if you decide to move, you sell to somebody that's at 80% of median income. So you enjoy the benefit of that too.
So kind of building on the question of can you expand on the home, you could tap into that equity.
To
Absolutely.
build a garage, a carport, whatever.
Exactly.
You can always get a home equity line, or if you refinance your mortgage, you can take cash out that way, and you can always tap generally up to about 80 or 90% of your home equity, so you've got that there as a nest egg if you ever need to tap into it. And in your question too, keep in mind there's some grant programs. Starting in March, we have not to be confused with Welcome Home Ohio, we have the Welcome Home Grant Program where you can get up to $20,000 for down payment assistance, closing costs. That starts in March. The city has their down payment program as well. It starts February 3rd. So there's programs out there to help you even if you need that extra help for the closing costs, so keep that in mind.
And what does the warranty look like for something like that, for like the 30-year house? So what is my warranty for the house construction and all that, that's included?
So you have a 5-year warranty on all of the construction, and you have the manufacturer's warranty on everything else, the appliances, the HVAC system, so that you just inherit all of that.
And
5 years for a roof, yeah.
as far as our loan process, just things you're gonna need, just keep in mind, really for the pre-approval, we just really need to verify your income, get with us, we'll pull your credit. So last year's W-2 and a pay stub is really the main thing to get us started, so we can figure that out for you. I know we're running a little low on some of the packets and flyers, but at least get one of our cards, myself, Christina Gardner over here, you might have saw Jen Torres downstairs. We're the 3 lenders, First and Dusky, that you would wanna talk to. Get one of our cards or one of the flyers that has our email on it. Shoot us an email to get started. If you don't have the information, we'll email that to you, or we'll immediately get you the link to get the process started for the online pre-approval. There is an online application. We'll shoot the link. You fill out your info, sends to us. It's a pretty quick process to get you started. So that's kind of the next step for you is the pre-qualification. So just make sure you got one of our cards, one of our info, and reach out to one of us to get the ball rolling on that next step for you.
Yeah, I was just wondering, the homes to be built, what's the geographic locations, or are they kind of spread all through the town or a specific area? North side or south side of the tracks, for
It's a great
example?
question. They are spread throughout the city of Sandusky. All of the lots that have been assembled are listed on our website, so you can go in there and it'll actually take you to a map and show you where they are. We have clustered a good number of them together so that you aren't the only new home on the street that perhaps you're right next door to another new home. There's a significant amount of homes that are being built on the south side. It's intentional. We did some planning over the last few years and committed to building new homes in the south side area of Sandusky. So So you'll see, actually, the first village will be on the south side on Pier Street.
Oh, Pier Street area, the south side, the old south, okay. Thank you.
Anybody else have any questions for me as far as financing? Yeah. You don't, not required, we're partnered up with them, but you do not have to do it.
You said for you have to prove WC stuff, are there different qualifications or you prove to bring for 1099?
Tax returns, yeah, if you're 1099, you're self-employed, you just want to bring your most recent year's tax return. We're gonna use the income basically off what you claim on your tax return. Yeah.
Another question over here?
Do you get to pick your location? I know it's first come, first served, but do you get to pick the location as to where it's going?
The lots are already set. If you have a particular house in mind and you're pre-qualified, and you want to identify that as your home, we'll work with you on that.
Any other loan financing questions? Like I said, just, email us, call us, we'll help you. Oh, is there another one?
Does Vista acknowledge, the housing authority has a voucher program for homeownership? If there's getting subsidy through that program, does Vista include that as an inclusive resident?
Yes, yeah, if it's qualifiable, yes, we can use that for sure, absolutely. Yep.
What if you have a lot? If you have a lot, can you still get, like, in the program if you already own a lot?
I don't believe so, no, because they're building on city-owned lots. So if you own the lot, then if you wanted to build, you would just have to do your own build, which would be you getting your own construction loan and going through that whole process. Yeah, but you wouldn't be in the program, no. Yeah.
Any other questions for Tim on the lending? And as he said, he's available, so he can answer the specifics.
Yeah, we'll be here, we're here today, or like I said, reach out to us any point, we're always working, so just give us a call, shoot us an email, we'll get you the info and hopefully get you rolling. Thanks for everybody
Thanks,
for
Tim.
coming out.
Tim, will you advance that? And I think, Brian, you want to talk about the financial literacy real quickly? Thank you.
All right. My name's Brian Green. I'm the director of the Homeownership Center at NeighborWorks Toledo region. I've got a team of 5 HUD certified housing counselors that last year we helped guide 105 individuals through the homeownership process. We helped create 105 homeowners last year. To give you just an idea of what that class kind of looks like as a general overview, we typically try to work with local people. So we would bring in a local bank to talk a little bit more specifically. Home inspector, know your rights, looking at what just that process looks like. What we do, what our goal is to navigate and guide individuals from, I don't know what I want to do. I know I want to buy a home, but I don't know how to get from A to B. And we are here just to help guide people through that. So, like I said, typically we do this class as an 8-hour, 1-day Saturday. I know we're looking at doing probably a handful of dates up here. I'd come up with a couple members of my team and we'd put that on a couple of different times throughout the year to help those of you that are looking to purchase. So.
Can people that aren't part of this program attend your classes if you have them here?
I don't see why not, as long as we have the space, yeah. Be happy to.
So that's a really good question,
Yeah.
because financial literacy, we're underrepresented in our society, but the fact that they're here providing it, if we can invite others to it, and it may help them, even if they're not becoming a homeowner, but just help them manage their budget. That's especially true for young people who are not getting enough of that.
So I'm surprised there's not more younger people here.
Help us spread the word then.
Well, no, I'm here because my daughter.
Yeah.
I need her to move out, you know?
So I do think spreading the word is
Yeah,
important.
no, that's okay.
And sadly, one reason some younger people are not here is they are so far away from being able to think about homeownership that they're no longer, it's not even on their radar. So hearing that, it's like, well, that's not for me. But we would like them, especially young families, to think about it, because these are houses you can grow wealth and grow equity.
So then for the 2-person home, do they have to be married? Can they be boyfriend, girlfriend? Or do you count just one
They don't
person
have
on
to
the
be
loan? Huh?
They do not have to be married, so.
But it is a household income.
Yeah, it's household income.
Household, so even if that other person's not on the loan, you still have to count their income if you say they're gonna be living there.
So how does that work if you have children in college and they're back and forth?
If they're considered permanent resident,
Yeah.
Then we would consider them a household member from our side as a lender, yeah.
you never know.
So one measure would be if they're a dependent of yours and that's your household.
So a single mom with 3 kids would have to make 72,000 or no?
No, that's the maximum.
I mean, okay, that's, okay.
Yeah, so the minimum is what
Okay.
qualifies for a loan. You just have to fit somewhere in there.
Okay.
So I know it's a 3-bedroom, 2-story home, but say if you have like 3 kids and one of them has a disability and, need their own room, is it able to be like a 4-bedroom home, 2-story?
We don't have a 4-bedroom home design at this point, at this price point. So that, but we could work with you on that specific circumstance. Figure out how to make it work.
Oh, yeah, it's big.
And can you make them wheelchair accessible?
You can. You can. Because of that first floor, you have a full bath and a first floor bedroom. So that first floor could be visitable. You'd have to ramp into it, probably from the side or the front. But yes, once you're in the house, you can do that. You got everything on
Yeah, I
financial
think so.
literacy?
Yeah, like I said, it's a real deep dive into your budget, credit, or analyzing those mortgage documents. Sometimes those can be difficult, or if you get a couple pre-approvals and you're just like, I know what I'm reading, but I don't understand what the difference is. We're happy to look over those with people and say, you know, we're not going to tell you which one to take, but we can say, all right, this is what each of them's saying, and any kind of, like I said, step of that process and program. We have some individuals that we work with, they come in, they're ready to go, and from our first meeting with them, within a month or two, they're ready for purchase, but we have some people that, you know, it just takes a little bit longer. I worked with some clients that, I worked with them for about 4 years before we finally got credit and everything lined up, and everyone's journey's different with it, but we're definitely here to help along that way.
So wait, this is not
This particular is just a 1-day, 8-hour class, but we also do one-on-one housing counseling with
you're
clients
gonna
as
go over
well.
all 10 topics in 8 hours?
Yep.
And that's enough to get this?
Yep.
And is that before purchase, or are they doing this, are they
We
committing to this?
typically always do this as pre-purchase.
Pre-purchase,
Yep.
But you actually can run this in parallel, get pre-qualified, go through the financial literacy. These guys can talk, because if there's a credit issue that you want to resolve or consolidation issue that arises, I realize consolidation could be a solution on budget for folks because you have so much equity. So we're not saying you have to have a loan of a certain size and no more, but if circumstances permit you to consolidate within this loan, you might be able to do it. But that's a case where these folks will be talking together to help out.
Yeah, we've got it down to a pretty good flow though to do this in 8 hours, so we run it about 6-7 times a year, so.
Oh, I trust you.
We've
I
been
just,
doing-
it's over my head.
It is, it's a busy day, and that's why normally we try to set something afterwards for individuals, just to give them a call and say, you know, you had a really long day, you learned a lot, what questions did you have? Because every time people will leave and they'll say, gosh, I wish I would have asked this, I wish I would have asked that. So we make ourselves as available as possible to answer those questions.
Question for you.
Yeah.
Say I am interested in purchasing a home, and I know that I don't have that 5,000 right now. Could I go to the financial literacy class and get that done, go and get pre-qualified and defer my house construction until the end of the year?
Yeah, I don't see why that would.
'Cause
Yeah,
that
you could
will-
be in the queue. That's a
Yeah.
good example. Because it's actually, you could be contracting for a house that's gonna be delivered in April 2026.
Okay.
Because it's, if you just think about the timing of that with 2 a month, you've got, 17 months, of construction. So yes, and that actually could be a solution for folks that was like, they see that, they go through the pre-qualification, the financial literacy, they see exactly what they need, they're gonna save for that.
And then that way that will lock in my spot, then okay.
You're in contract then.
Okay.
And we'd still be available to you if questions came up throughout the process before purchase too, so.
Seems like that would be a better, a better fit.
You're asking really good questions. It's a
Thank
list
you.
of things we have to talk to the state about, things we have to huddle up and solve, but thank you.
Oh,
Because
thank
that's
you.
exactly how the program, how we evolve the program so it works best for everybody, is like asking the specific questions that make it work for you and seeing how there's a resolution, including the handicap accessibility, the convertibility of the unit and so forth.
And are you, the financial literacy part, are you available for life then, once we make that
Yep.
connection?
Yep, we have clients that continue to work with us post-purchase, that things will come up, they'll have questions, or, things happen where now suddenly I'm in this home, but I wasn't making payments on my credit card, or something happened with my car, I need to get a loan, but my credit needs to work to get that back. So, yep, all of our services are free, and we're available, so.
Ralph?
If someone is in the unit and after 5 years they decide they wanna move, and they have to sell it to another person who's at 80% or less of AMI, is the city going to work with trying to keep a list of people that are eligible for that, or does the person just need to understand, I've gotta find someone who meets this criteria when they go to sell, and that's gonna make it hard for them to sell?
So I think that, I wasn't thinking the city would keep an ongoing list, but in an active program, they might have a list of prospective buyers. But I think what would happen, most typically would be, it would be listed with a broker. The broker would list the conditions and they would do the initial screening. That's typically what happens with a restriction like that. And they would even put it in the multiple listing, this home is available at this price to a qualified buyer.
Because they're gonna be able to sell it at the actual value, instead of it being at 150 and they purchase it now, if it's worth 300, a person who's at 80% now trying to buy it at 300,000 is gonna have more difficulty.
Yeah, so the price is gonna be governed by that 80% affordability. Now, if it's a 4-person household with $72,000 adjusted upward over the next 5 years, that's your bar.
I was gonna say, it goes up every year too.
Yeah.
And that figure's gonna increase every year, so that's gonna be a much higher figure in 5 years.
And this is how we're gonna prevent Airbnb and landlords buying them to rent out.
Exactly. That's one of the focus, the legislature focused quite literally on that. No short-term rental, no rent, not creating an investor pool. It's really, this is home ownership. They're putting the grant in and they're thinking it's gonna take care of this family that's the buyer and also thinking about the next buyer. So if the state's putting this money in, they want the return on investment is making affordability for a longer period of time. And I think that's a fair trade. It's a good benefit, but it's one that lasts beyond the initial buyer. Anything else on this? Any other questions on financial literacy? Again, Brian's here, he can answer questions. Tim, can you flip it forward just a little bit? I think we're right at the end here. Yeah, okay. So, we had questions along the way, but do you have any questions of me right now? And I'm happy to answer them or try to get an answer for you. As Colleen mentioned, we've got a few questions. We're gonna go to the Department of Development and ask for answers. We're gonna do the frequently asked questions will be what was covered here at today's meeting. Post those on the website so you can look at those. We encourage you, if you're interested, to go through that pre-qualification process as soon as possible with a lender. You've got some that are here that can answer questions. I asked the question, and I don't want to put you on the spot on the consolidation of loans, but I realize with so much equity, if you can consolidate a installment payment on a car or something like that within that mortgage, it might change your debt ratio.
Yeah, on the initial purchase, it would have to be
Later.
or.
Got it.
Or, not, something not tied to the mortgage
Got it.
initially. We can do consolidation loans where it's just like a personal loan kind of a thing.
At some
We'd have
point.
to look at
Okay,
that.
that's helpful. Mark, you have a
I
question?
just want to remind you that since there are 3 floor plans on the table here for your edification, they're all the same, they're built.
Yeah,
I was gonna
thank you.
mention this flyer It has the city website, it'll take you directly to the project website. It has the floor plans, the eligibility, pretty much everything we covered today is on that webpage right now. There's a place on the webpage to sign in with your email address, so if you have neighbors, family members, folks in your network that might be interested that weren't here today, they can send us their email on the website too. So this is a good flyer to take with you. We have a whole stack on the table here.
And many of you may have found this meeting today through our website and have already asked questions, and I've answered every question that's come into us thus far, and we'll continue to do that. If you have questions for us as city staff members, please by all means, feel free to reach out today. We'll be here till noon, or just give us a call, or you can find us through the website. We've been really responsive thus far. I can't stress how thrilled I am that this room is so packed.
Yeah.
And really, really hope that we have the opportunity to make homeownership a reality for you.
And this PowerPoint we'll put on,
Yes.
on the website as well as frequently asked questions, and we'll just keep it going. And keep, as long as we have your contact information, we'll keep you current on everything, including the opportunity to come and look at a model being delivered, so you have a chance to walk the unit.
We do,
here
we
coming up.
talked a little bit about schedule, Martin, put you on the spot. We are scheduled to break ground at the end of this month on the Pierce Avenue units. There's 2 units, 1815 and 1817 Pierce. The modular units will be delivered in February. They're actually going to be staged at Mills Golf Course until we can deliver them to the site. And once we begin building, and hopefully once we get towards being closed, maybe we could do an open house.
Yeah, I would like to do that.
I hope it's sold by then. We can't do an open house, but we certainly could.